So just a quick 5-minute vol update. So we've got S&P down just a little bit today. We've got the Bitcoin complex bouncing. Just a reminder, everyone, of the disclaimer. So that anything we talk about today is for educational, entertainment, and information purposes only. MSTR we'll take a look at in a moment. Dell, not great results, pulled back a little bit. We're going to lose a little bit of money on those long calls, but I financed them, so there really wasn't too much to lose at this point. Not a big deal. Sometimes you take a shot, but it's a measured shot, it's a finance shot, and occasionally that's going to give you a 10 bagger, and occasionally it's not going to work out. So VIX today, kind of neither here nor there. I think it has the potential to push a little bit lower into the holidays. Let's take a look at the term structure. So we've got this beautiful term structure. This is a very happy face, right? I should put a little happy face on there with my pen, but I don't have it out. So very healthy term structure. We can see a good little bit of erosion in things like VXX and potential upward pressure on SVIX, SVXY as this structure really plays out, right? So we have these futures that are in a nice contango, VIX well below that at the 14 range. If the VIX can get into 13.5 range and VIX drop a little bit more, you'll do even better on those trades. But the fact is that these things are basically going to roll themselves to oblivion because we have this structure kind of moving towards the VIX as we get closer and closer to December. Remember that things like VXX roll into the following month as well. So VIX and VXX a little bit different, similar things going on, a little bit short Vega. It's a little bit more theta these days. I think VIX has a little bit more room to go. We can see the move index pulling back here. I'd like to see it down in the lower 90s. This was a big moment. Remember I talked about this, that sort of Powell pivot, which was kind of saying that we're a dual mandate again. We're not just about employment. We're about being concerned, slightly hinting that they're concerned about GDP being very strong, data being very strong. That's what we want to hear out of them, right? We don't want to hear they're going to cut rates no matter what and overheat this economy. So they're a little bit more measured, and stock markets like that, right? There's certain parts of the market that aren't going to like it as much, which really wanted massive rate cuts. Certain parts of small caps, even though we're seeing small caps do very, very well into the Trump backdrop. So let's take a look at TLT. Bounced up as well. TLT in the high 80s or mid 80s would have been very, very concerning to me. This I like to see. Vol's coming down. I'm thinking of a structure that would play even a further move up given the relatively low cost of volatility here in products like that. So we're starting to get to that point in the vol markets where, you know, if they get it low enough, I think it's going to look kind of interesting, as I'm going to talk about in a moment. So MSTR, a little bit of a bounce here. We got up into the 395 range. I think this is probably not a bad short with a smart structure. I'm not saying short this stock, but I think playing some sort of structure like we did the other day, which made 100% on a down move. I think you could do that here as well. And the thing is, I think it's now in a range where volatility can continue to compress a little bit. So you want to have structures that are going to make sense. Things like flies, broken wing butterflies, etc. There are many, many ways to play that kind of thing. So we're going to be looking at those in the community today. Check in the description below to see how you can be a part of that. And that's it. So I think we just kind of continue on here. I wanted to show one more thing actually, which is the gamma outlook, right? So let's take a look at this. This is a little deeper into the weeds. I know not everybody follows this kind of stuff, but when you're long gamma, it's stabilizing for markets. It reduces volatility. When you have these red areas or areas below this middle zero line, that's short gamma. So that's where dealers are not really supporting markets on the way down. They're not really selling stock on the way up. In here, you have massive amounts of stock right now. So think of that sort of 6,000 or even a little bit below 5,975 all the way to 6,100. Think of that area as being very, very gamma rich, where dealers, there's going to be a lot of stock for sale as we rally. So it's going to temper some of those moves. And there's going to be a little bit of support to the downside. If we get going down strongly, we could get a little bit of an accelerant to the downside as well. But generally speaking, we're a little bit supportive here. And given the backdrop of corporate buybacks, of end of year seasonal kind of stuff, I think we'd probably get that support that we're looking for. Now we get a lot of this burning off over the next week, we're going to see a lot of this expire, and then we're going to end up with a little bit smaller long gamma position. And then we'll see how much of that gets replenished. But we could see a situation where maybe if we get through 6,100, if we're going to have to plow through that big JPM collar strike, which is not an easy thing to do. But if we can do it, possible, we could get into a situation where 6,100 plus could end up being an accelerant area where the market could actually start to melt up. So what I'm doing is I'm looking at certain plays that could take advantage of that, where maybe upside's a little bit cheaper, and we're going to look at various trades in the community on that. If you want to be a part of that, check out the description below, and we'll see you in the next video. Black Friday sale on, by the way. See you soon.